HG. That's all I gotta say. Plenty of exposure there. Now, speaking of complex businesses, Pharma's one that I've began to avoid. I sold out of all my AbbVie a while ago, and it's just like a lot of people are giving me shit for it, but it's like I don't understand the business. I'm never going to. I don't have enough time. It's like, why would I continue owning it if I don't understand it?
Yeah, and that's why I try to be pretty diversified. And I don't even know if I have about 45 different stocks in my portfolio, and I don't even know if you would consider that too diversified or not diversified enough. But and that's the reason, because it's genuinely hard to fully grasp and understand the whole business model of every single one of these companies. So for me, it's mostly just like asset allocation for the most part, because it takes a lot of time to fully understand everything about the business and know exactly what it's going to do in the future. I had to be able to forecast the business's performance. So yeah, would you say 45 is enough? Too many? Not enough?
How old are you?
By the way, I weight it in certain ways. So like some companies I have a lot more weighting towards. But I tweeted that recently, and I didn't think it was going to be controversial, but some people were like, you're stupid for having more than 10. And then some people were like, oh, I have 50. So you're fine. Right.
How old are you?
So I'm 27.
Okay.
And I kind of told my story on Ari Gutman's podcast a couple months ago, how I started investing trading when I was like 20, when I was in college. But how old are you, Ryan?
Guess.
19?
18. Close enough.
18. Okay.
You're 2 months off.
So yeah, I was a little bit older than that, and I started out just like basically just throwing a dart at a dartboard and just picking any random stock and just kind of cross my fingers hoping that it would go up. And then I eventually, as you can imagine, lost too much. I was down like 75% in my portfolio at one point because I just was stupid. And then I eventually just switched to ETFs, and ETFs has been awesome. So been doing that for the past 7 years, dollar cost averaging into ETFs and then high quality companies. And like I said, the reason why I'm not extremely concentrated is because I can kind of get the surface level and understand that a business is high quality, has a wide moat, increases its revenues and its cash flow, has, higher margins and a fairly low PE ratio. Like I can understand the surface level and the basics of a business. And that's when I'll buy according to what I know about the company. But that's why I'm not concentrated, because I don't fully grasp some of these companies, and I might not be able to make a good wager or a good bet.